Okay, guys, it's Wednesday morning. It's 8:30 a.m. And I believe that there's something which is coming now on the market, which we are gonna be taking a look into that to see if it's gonna pan out the way that we have been waiting or been expecting it to. Okay. So first of all, we're gonna go and check what the DXY is saying. Is the DXY aligning with all our plans, or we have something else on the DXY? So we can see that the DXY did reject on this area here, which we did anticipate. We were waiting for something like this to happen. Okay, this is what pushed gold to the downside. So if the DXY is gonna be able to hold this level here, this will mean that the DXY is gonna go down and then the gold will go up. But in this case, I don't think the DXY is gonna be able to push all the way down. Looking at the internal structure, that's what I'm focused on right now. And then what I see internally, I think the DXY is just gonna make a bounce inside here, and then it's gonna look for a break above. Okay, we might be getting a bounce in the near zones here or on the trend, and then we start pushing up. That's what I'm seeing now on the DXY, or that's what the DXY seems to be presenting to us at the moment. Okay, so the 4 hours time frame, we can see that the DXY opened with a gap below the zone, which make it hold below the zone and continue pushing to the downside. Okay, in which we're gonna be counting on the coming for our candlestick. This was the move that we were supposed to get a touch down here before we go up, which for now is still valid. As long as we can break this area here, we know that it's gonna be coming down here, and then it will shift everything that we think of the dollar index, because once the dollar index is pushing down, then we're gonna see gold pushing up. Okay, so we see how the dollar index is still trading below this resistance here. So since the dollar index is rejecting the resistance and then pushing down, let's see what the yields are doing just to gauge the pressure as well. We can see that the yields continued the way that we expect. Remember on the last video I talked about them, they were still below here. I said if we break, then gold was gonna go down, and then they did manage to break and push up, and then we saw gold going down. Okay, during that moment. So today I can see we have this 4 hour here, in which to me, what I believe that what's gonna happen now here, I think we're gonna see something like a retracement. It can come to the 38%, it can go all the way to the 50% or 61% of the Fibonacci retracement. But this is what I believe about the yields now. They're gonna try to look for any level or area around here or a bit down there before we see a continuous push, which is gonna get us all the way up to that level there. Okay, so once the yields are pushing down like this, if we see the yields pushing down, we have to look at the gold now, like how is gold reacting to that kind of push. Okay, so we're looking at gold where it is now. Okay, so remember on gold, guys, we've been looking for drops to come and mitigate this area here, which we ended up getting to that area there. We talked about this on our first video. Remember, that was the target. We were just targeting below 4,100, and gold did manage to push below 4,100. Okay, now let's go to the weekly time frame first. There's some few things that I want to see on the weekly time frame. So weekly, we are only on Wednesday. Okay, and then weekly, if we look at what the gold did here, we can tell that there's still a chance for gold to flip this and push all the way up if the market is responding to all the patterns correctly. Okay, so daily, how we look now on gold daily, you can see that we already have that idea coming together, which means that all that we need to do now is to take out this high. It's Wednesday, we are still on Wednesday, so if we can take out this high, it's gonna be easier for gold to go on a break and then try to target the high of 4,400. Okay, because where we are rejecting now, the pivot point that we are rejecting on now, look at this and then look at that there. Okay, so these two zones here, they are corresponding, they are responding to each other. This is a nice mitigation there. Okay, something that we look for as traders if we are about to jump on a trade that we are looking for continuous move to the upside. Okay, but although we don't jump the gun here, we need conferences that are gonna tell us that yes, we are going up or we are gonna still continue down. Okay, because remember, this area down here is still an area that we might find ourselves targeting or playing around. Okay, so we don't jump the gun yet, we wait to see what the market says. Now let's go down to the 4 hours. Okay, so on our 4 hours time frame, we can see this pattern which is forming here. I don't like it until we break above it. Okay, if we are still failing to break or to find a break above it, it's not something that we can hold on. Okay, it's not something that we can hold on. So although we had this internal higher lows, this was the lower low, higher lows, higher lows, and then we shift and start having like lower lows internally. This lower low here, it's also gonna act as a higher low externally. Okay, externally on a bigger time frame, it's gonna be a higher low because remember, we created a higher high. Okay, because this high here now is higher than this previous one which we just reacted on here, or which we just tapped on. So this makes it a higher high, which means that if we create a higher low, it means that this higher low is gonna push us down to have a new higher high. Those are the things that we do focus on when we are trading. Okay, but then we don't ignore what the lower structures are also saying about that. Okay, because the lower structures are also trying to communicate something to us. And then looking at this time frame, like I said, I don't like it when I'm trading and then the market is forming this pattern and then I'm looking for continuous move. Okay, because it's telling me that there is more room to expand to the downside once it start forming patterns like those, which means that we are gonna be going down targeting 3,940 if we continue down. But if we are to reverse and continue up, then we know that we are targeting 4,400. Okay, those are the things that we are gonna be on a lookout for if we're gonna go down on this trade. Okay, so I've been looking at all the time frames, and then it's getting to the conclusion of looking at this moving average and how it's presenting itself. And after checking how the dollar index it's also still bound to that support, and then it's not telling us that it's gonna continue down where it is now. It's not giving us that clarity that I'm gonna continue down. Then looking at this, it does tell me that gold might still be forced to be pushed to the downside. Okay, most importantly, if the yields are to reject where they are and then continue up, since the yields are bullish as well. Okay, so we might see gold continuously moving to the downside. Okay, unless if they use the signal that they're giving us that they can have a drop, they can hold on to into that and then start dropping, then yes, we are gonna have a continuous move to the upside on gold. Okay, but now what I see and like I said, and the pattern that I'm getting here, this is more of a continuous pattern. We can see that it has mitigated all the areas here, which means that it's easier for gold to just continue dropping than continue going up. Okay, we need those drops instead of getting those push ups at this moment. So my focus on the daily momentum now, I'm still gonna focus on the lower time frame, which was giving us lower highs and lower lows kind of a structure, which means that I'm gonna be bearish for the day. Okay, and then my first target, we are gonna be targeting just around 4,080. And then if we can break and then retest around 4090, then we can continue selling all the way to 3090. Okay, those are the things that we can get to look into. Even if we go to our 30 minutes time frame, you can see that the moving average is still binding this trade here, or this movement here, which means that the only thing that we are gonna be on a watch out for now is the fact that the market still have more room to push down. Okay, so for us to start looking for those buys is when we are trading above this moving average. Okay, it's only when we are going to be trading above this moving average. If we are going to fail to go above this moving average, yes, there's something that I am looking into, or something that I'm looking for. Okay, so if we do look at this candlestick here, this blue candlestick here, the high of it, and then we can just go from that to our right. Okay, so we can see that this is where we can finally get something like a market structure shift on a lower time frame. Okay, and that's something that we need to see if we are going to be looking for more drops to the downside. Okay, and check out this lower low here. So what we want to see, if the moving average is gonna hold, we want to see a push which is gonna come and close below this market structure shift, and then the retest of it. It doesn't matter if the market crosses a bit inside, it's gonna be following some sort of a liquidity maybe, or just feeling the imbalance there. But those are the things that we are gonna be focused on, or that we are gonna be on a watch out for. But remember what I said. Okay, this is only below this market structure shift, but above we still have something on the upper side. Okay, should the market make it all the way up here, which is gonna be around 4148, if I'm not mistaken. Yeah, 4148. Then it's gonna be hard for us to continue down, because once we cross above here, the market can only dip looking for an imbalance, and then we continue buying. That's how we can continue buying. But for now, based on this bias, I can say let's continue being bearish. Let's look for bearish continuations. There's still a possible scenario for bias, but that's only if we are crossing above this moving average and then starting to seek the price higher. But if we're still lower and then we're trading on this lows here, then yes, like I said, we are more likely to push down. Okay, the only push up that we can have, which can cause a bit of interruption, is if we are gonna be trading somewhere around here. This is another area that we can tap on. Okay, we do have a bearish order block here. Okay, we do have a bearish order block there. We do have this bearish order block here. We can go for that, or we can stick on the fact that we have this imbalance here, which was mitigated now there with this price action which is happening here. But the moment we go below here, the moment we break below here, you must know that everything which was bounding us to that area is gonna be out of there. We're just gonna continue down from there. Okay, we're just gonna continue. Once we get this market structure shift, just know that we are gonna just continue down. There's nothing which is gonna be holding us above. And then if we come up here to tap here, then yes, we're still gonna be looking at a shift. Okay, we need a market structure shift, and then we focus on those cells. Okay, so what I can say here, we are not about to jump the gun. We need to see a lot of confluences for us to dictate if we are gonna be going up or we are gonna be going down. Okay, we can see the same thing happened here. We had this OB here, when we see that it was also tapped onto with this bullish doji candlestick here, which is pointing us all the way up to this retracement that we have now. So we are gonna be looking at those things here. We can also tell even here, okay, after creating the structure here, the engulfing and then the drops. These are things that you just have to be aware of when you're trading. Those are confluences or signs that we tend to ignore most of the time, but we cannot ignore those things. Okay, you can see how we reversed here when we go for the bar. You can see that bullish engulfing after creating this lower low here. We can see a bullish engulfing, a retest of this structure, and then we continue up. Okay, that's how we can be trading. That's how we can be trading. Just be aware of the zones that are nearby, and then trade when the market reaches those areas. Now we are looking at this area here. This is the zone that we are going to be looking at in the moving average. Okay, and also where we are now, it's a very strong zone, which I don't believe that is going to be easy to penetrate, which means that the moment we get a market structure shift here also, we are going to be looking for any retest or the price action which is gonna be happening there, and then we're gonna take our trades based on that to make sure that we have a clear push. It's either it's gonna be on the upside or the downside. What we are waiting for though here, we are waiting for a clear push to the downside. Okay, which means that the only thing that we are gonna be focused on when we are looking at this are gonna be selling opportunities. Okay, we need selling opportunities at 4,120, in which we can have our SL just above 4,127. Okay, and then our first target, we are targeting this low here, which is gonna be 4,090, and then the last targets are gonna be all the way down to 3,090. Okay, we are gonna be targeting 3,090, which is gonna be all the way down here. That's where the 3,090 is. We are going to be targeting that all the way down there, but nonetheless, market structure shift, an imbalance retest, and then we can see we actually do have a trade. But as for now, don't jump the gun. Let's just watch, because there's still a possibility of getting this trade all the way higher here, and higher is better than lower if we're looking for sales. Okay, if we're selling higher, that's better than when we are selling it lower. Okay, so we're just gonna have to be on a watch out for that. Okay, remember, we need to make sure that the DXY and gold, they are on sync. You can see it here. The DXY is rejecting on this 15 minutes moving average. Let's look at the 30 minutes. Even on the 30 minutes, if it closes above and reclaim this area, then yeah, we know that the DXY is gonna hold above, and then it's gonna be looking for a continuous push to the upside, which is gonna mean only one thing for us. We are looking for continuous move to the downside. Okay, on the gold. But if the DXY is failing to hold above, then we are gonna be looking for continuous pushes to the upside on gold, if the DXY is dropping. Okay, but if the DXY hold, which the first push that we're expecting to see on it is gonna be here to go for a break, and then the last push that we are gonna be expecting is when it start by going down and then push lower there on the trend. Okay, that's where we can also expect to see another push. Nonetheless, if the dollar index is bullish, then we know that gold is gonna be bearish. Okay, so those are the things that we need to be aware of. That's why I say make sure that they are on sync, which for now, the things that I'm seeing, and when I look at it, I can say less about it not being sync, because for me they are in sync. You can see how they are trading, all of them. Okay, you can see the gold is failing to break above the moving average of these lower time frames. It's being held bound by them, which means that as long as it's trading below this moving average, we are still bearish. Okay, and those are the things that we are going to be focused on. I'll see you on another video, guys. I hope this video is good enough, or it did explain enough to you. Here are the parameters that we are going to be looking for: 4,120 for an entry, and then for an SL, we are going to be looking at around 4,127. So that's going to be tight. I think it's going to be a 7 pips SL, and then going down, we are going to be looking at 3,990 for a TP. Okay, those are the parameters that you can be on a watch out for if you are interested on this trade. But we all understand how this structure works, or how this pattern works. Okay, So it's always like this. It has been like this. Once the market breaks an uptrending structure like this, we expect it to continue pushing to the downside to the point that it can reach lower levels